Hello guys, and welcome back to a new video. Today I'm going to share with you a trade that I took on EURUSD based on the analysis that I made around 3 weeks ago. But it's not about the trade breakdown, but I'm going to share with you a valuable lesson about the relationship between the higher time frame directional buys or higher time frame analysis and lower time frame entries. So there is a gap between the two, and I'm going to teach you how to bridge that gap. A lot of traders will either have the perfect entry model, it has all the necessary conditions, all the necessary confirmations, but their higher time frame analysis are bad. All right, they always mess up with the direction. And a lot of traders will have on point higher time frame analysis, but when it comes to entry, everything changes. All right, they can have the right analysis on the higher time frame, but they can easily take a 5 trades losing streak. All right, so today I'm going to teach you what to do when you have your higher time frame bias and when you go to the lower time frame. So let's get started. First of all, this is the weekly time frame, and I shared with you when we were here on this candle, and I share with you that we will likely to see the upcoming weeks going bearish. All right, a lot of traders didn't see this on the higher time frame. If you go to the weekly, it's obviously that we are bearish, right? After this candle, you can expect some kind of bearishness, but a lot of people will have the daily as their ultimate higher time frame, and they won't go above it, and you can easily get tricked right here, right? Everything is looking bullish from here. We have a break of structure, and you will get easily tricked trying to long from here, while the weekly says otherwise. So after I had this higher time frame buys that I'm looking, or I'm expecting the next 2 or 3 candles to be bearish. This was also a target. We had this one and this one, right? Now, when I go to EURUSD, when I open the chart, I'm only looking for shorts. And since I did this analysis, I took 3 trades on EURUSD. That's it. 3 trades. In the span of 3 weeks, I took 3 trades. All of them are short. All right. So when I open the chart, I'm only looking for shorts. I don't care about longs, only shorts. So that's the first thing. The first lesson that you should learn is that when you have the higher time frame buys, all right, now you switch to that direction only. You don't even think about the other direction, even if it prints the perfect conditions to long. All right, in this case you don't, because you're gonna adopt this habit of counter trading. And believe me, you either choose to be a counter trend trader or a pro trend trader, because each one takes years of practicing. It's not an easy thing to do, to trade both sides of the market. So that's the first lesson. Now you switch your mind to only looking for shorts. Now here's the thing, and this is what a lot of traders messes up. And I noticed that this lesson that I'm going to talk about right now is adopted by high-level traders. All right, at least the traders that I know that they are pulling money from the market consistently, which is this: when you have the buys, right, and you see price moving with your buys, you will have this euphoria that you called the market. All right, you will feel happy, confident, and what comes next is that you're gonna rush the entry. You see price moving with your bias, and you think it's moving without you, so you rush to your entry. Even if the entry is not there, a lot of traders will wait for a day or 2 days after they call the bias and price is moving in their direction, but they don't have a clean entry. They would wait for a day, 2, depends. They don't have an entry, so they rush it. They don't want to waste that analysis that they did. All right, and that's a big problem. There's a trader that I know. He would call 10 higher time frame moves, and he would trade only 3 of them. All right, for example, he would go to EURUSD and predict that the next 3 weeks or the next 2 weeks will be bearish. All right, sometimes he won't find an entry in those 2 weeks, or at least a low risk entry. And this trader pulls market consistently, alright? He's a proven trader. He's not on social media. When you have your higher time frame bias and price is moving in that direction, it doesn't mean that it is a signal to enter, alright? For example, you can see this right here. I couldn't find any trade here, alright? Just because I know that the market is going down doesn't mean that I will log into the chart every single day and find a clean sell entry, alright? So from here all the way to here, so that's 7 days, a week, I couldn't find an entry, so I stayed flat, alright? I didn't take any short, and I know a lot of traders that got cooked inside this, although they have the right direction and they stated publicly that they knew the buys, but they got cooked before price moved to that direction. But look what happened afterwards. See how price is smoothly trading to the downside right here. Here I found an entry, alright? I took an entry from here, I took an entry from here, and I took sell from here. 3 sells, and I had to wait for this to pass. I waited for this pullback to end. I waited for this consolidation, so a pullback and a consolidation. There is nothing to short from here. I have waited for this because these moves happened in unusual times. I usually trade New York mainly, right? This one, you can see that it happened late at New York, late at the day, so I couldn't short from here. So the lesson right here is that when you have the bias, price starts moving in the direction, you need to relax and you need to wait for the conditions on the lower time frame to fall in place. So treat the lower time frame as the higher time frame. Do your analysis on the lower time frame, just like you did on the higher time frame. Find invalidation level. Try to find the next move on the lower time frame. For example, here, yes, we are bearish from the weekly, but can you call the next move right here? Don't let the higher time frame influence this. Just because you see this consolidation and you think, yeah, we probably at the end of this we're gonna go to the downside, so I'm gonna look for shorts. No, the hourly isn't suggesting shorting, it is consolidating. All right, just because the higher time frame is bearish, the hourly is not bearish yet. All right, we are trading to the upside right here. We could easily see another push and then going to the downside. So treat this as your higher time frame and wait for things to fall in place. So that's the second lesson. All right, stop rushing the entries. Now let me show you the trade that I took today. It was from here, and here's, I took it on my a Forex account, prompt firm. You can see the short from here, and I closed it here. And I'll tell you why I closed it from here and didn't hold for this one. But let's go back to here. So after I saw that price is smoothly trading to the downside, we have left this. You can see that it's really hard to find entries from here, guys. All right. I saw people take so many break evens because price is not expanding, all right? A lot of people chase 1.5 and 2 hour trades, and it's just not possible in this without taking high risk. I saw that price is retracing to this 4 hour imbalance, all right? So I have the weekly in my side, the order flow is on my side, all right? I'm gonna show you what happened on the lower time frame. So you can see that this area right here, this imbalance, and finally reaching to that 4 hour imbalance, all right? It's pushing price multiple times. First one right here, 4 a.m., 6 a.m., one more push or one more rejection. At 8 a.m., one more rejection. But you can see that after these rejections from here, there was no confirmation on the lower time frame, all right? So one more time at 9 a.m., price traded to the upside. A huge move to the upside, and this is an entry model that I shared. When you have a displacement in the direction against your bias, and then you have another displacement in the opposite just after it. So if we go to the 5 minute, you can see that price was moving normally right here, average range, average sizes, and then we have a displacement to the upside, followed by another displacement. And when this happens again inside a bearish point of interest, that's a really good sign that price is ready now to trade to the downside. All right. So for example, we have a displacement right here. It happened at 8 a.m. But you can see that we don't have that follow-up displacement afterward, right? You see that price just stopped. So this is why you need to wait. As I said, there was no confirmation side here, all right? So, and also this right here, this line is the new hourly candle, 9 a.m. candle. It opened, traded to the upside and traded to the downside here and closed below the open, right? So it created the high, and then so it opened from here, it created the high, and after creating the high and we traded below the open, we are already expecting bearishness. So this tells you that this is a good sign that we might expand lower next, right? So this is how it looks like on the 15-minute, right? Multiple sweeps on the upside. It just shows weakness, all right? I didn't want to wait for this imbalance to get broken because I thought it would be a late entry, and I'm already confident with my with this entry right here, right? For example, waiting for this imbalance to get broken would be the safest entry, but you can see that I would have missed that entry anyway. So after I entered from here, right, I was targeting an imbalance on this, the 15-minute. I was targeting the fill of this imbalance. I didn't want to hold because I saw this. So basically we could easily see a rejection from this block right here, right? And I didn't want to be greedy. So this is how you can manage to do higher time frame analysis and get high quality entries, all right? Again, I want you to look at this price action, right? Beautiful. This was a beautiful entry right here. Unfortunately, I missed that, but look at this. Look at this price action, right? I did log into chart in this period, but again, nothing was interesting to me, right? For example, this was Friday. See the price action on Friday? We have wicks on both sides. So this is the end of this video. If you have any other questions, you can always DM me in my Twitter account or leave a comment down below and I'll answer you as soon as I can. Now, happy trading and good luck.